Welcome back to Compounding Wisdom with Paul and Gio, a show about investing, financial planning, and life. In today's show, we're going to cover the market reaction over Greenland, investors buying the dip, economic growth becoming coming in a little bit better than expected, and the wisdom of the day. So, friends, information we share is subject to change and should not be considered as investment advice. Please see the disclosures at the end of the show. We are recording this on January 3rd. It's 1 p.m. Central Time, and it's freezing outside. -1 here. We have a friend who I asked them, how cold is it there? And she said 50 degrees and she's freezing. I couldn't feel sorry for her at all. And this cold front, hopefully you're hearing this and watching this in a warm place. And we're going to get straight into it because there was a lot of chatter last week on Greenland, especially over the weekend. And the markets were closed on Monday. So we actually didn't see the market reaction until Tuesday. And before I get into that, I just want to provide kind of a backdrop. Since 2020, investors have lived through, check out this list, the COVID-19 pandemic. That was the fastest stock market crash in history, with the S&P 500 falling 34% in just 33 days, the highest inflation in more than 40 years, the fastest interest rate hiking cycle in modern history, the Russia-Ukraine war, a regional banking crisis, domestic political and fiscal uncertainty on a variety of fronts, the tariff turmoil of 2025, and now the spat over Greenland. And so it is definitely a lot. And just showing you how the market reacted. Initially, the market fell on Tuesday when it did open, down almost 1%. Let's see here. There you have it. This is just the daily returns of the S&P 500 over the last 5 days. You can see there is no market reaction on Monday. Again, the markets were closed. God bless you, MLK. And then the markets fell dramatically just because of the rhetoric that was being used. And then we have what I wanted to show here now is that in the past, geopolitical crises often create a buying opportunity in the U.S. stock market. You can just see some of the major events that have happened. We have the Gulf War. 1 year after the Gulf War, the market was up 10%. Iraq invasion, the market was up over 26%. COVID-19, 1 year later, if you can believe this big number, up 43% on average whenever there is a crisis from a geopolitical perspective. Markets tend to do of all of this. I don't want to make it seem like, hey, every geopolitical crisis is just nonchalant. We should just not care about it at all. I think we should be aware for sure, but we also need to put everything in perspective. And so I think this is something that the current administration has done multiple times where they ask for a lot, even though they would be very happy with much less than that, but they start with a bigger number and try to get down to a smaller number. No deal was actually reached, but there was the concept of a deal is what President Trump was agreed to, and the 56,000 people who live in Greenland, and they don't have much to say about what's happening, I guess. Paul, what do you make of the situation in Greenland?
Well, Greenland specifically, as you know, I have the blessing of being associated with the Navy SEALs for quite some time. And about 7, 8 years ago, the SEALs shared with us that the future of warfare is the Arctic Circle. And because of global warming, the Arctic Circle is shrinking, getting smaller. And what that's done is it's actually opened up opportunities for China and Russia to have more direct access to the United States, either as the crow flies or submarines, which is more common for them. So the last 7, 8 years, there's been a lot of military training specifically in the Arctic. Russia, China calls that the New Silk Road. And so, again, classic start with Trump, classic art of the deal is, hey, let's start way out here with this outlandish proposal and then work back to center and have it look like a compromise. So it's obvious why President Trump would want access or a presence in Greenland. One, military strategy, two, precious metals, resources, and then three, just obviously having some visibility or control over Russia and China. And so, do I think the United States is going to take over Greenland, make it the 51st state? Probably not. But do I think we walk away with some type of military presence or regional location, I would not be surprised.
hmm From just looking at the numbers since the 2020 already shaping up to be one of the most volatile decades on record. So here, what I'm showing you now is that markets have logged roughly 459 days with daily moves of plus or minus 1%, and
Hmm.
which is, as you can see here, surpasses the total number of such days during the entire 1950s and 1960s. And so, and on average, per decade, 507 of those plus or minus days. So,
I'm
um,
taking the over.
oh yeah, for sure. But even then, even with all this volatility, even everything that I provided of the COVID-19 and tariffs, Greenland, whatever, the market is up over 114% since the start of this decade, and that can look very encouraging. Um, Jamie Dimon, he mentioned in his earnings call, the capital markets of the world are going to grow dramatically over the next 20 years. And uh, Elon Musk, who made a surprise appearance at Davos, he said it is better to err on the side of being an optimist and wrong rather than a pessimist and right. So there's a ton of headline risk, a lot of geopolitical risk, and that will never stop. Uh, But at the same time, just looking at the type of environment that we're in, there's going to be a ton of fiscal stimulus from the big beautiful bill. From a monetary perspective, there's the Federal Reserve is buying $40 billion of Treasury bills, so that's also stimulative. The consumer, we'll talk about that. That continues; they continue to be robust. So there's a lot of things that are in favor of just a kind of balancing of just like everything is bad and everything is good. There is definitely compromise. And I did want to mention that there's a lot of investors who jumped in on Tuesday to buy the dip. So on Tuesday, just one example I just pulled out of a hat, Bitcoin through January 15th, it was up almost 10%. And then on Tuesday alone, it fell 10%. And so it's definitely, if you think it's a hedge versus risk on assets, that's probably a mistake. It looks like more of a kind of a levered play on the Nasdaq or something like that. And the volatility of Bitcoin has definitely decreased over its lifetime. More institutional money, more investors getting into the asset class, but still a lot of big investors bought into Bitcoin when it did so. They sold off, the biggest one being Michael Saylor's strategy. They acquired 2 billion in Bitcoin over the previous 8 days. That's Bloomberg reporting there. A strategy does hold $65 billion in cryptocurrency, but there is more skepticism toward how the company is managing those assets for good reason. At the same time, it was a good idea until it wasn't. Maybe it could continue to be a good idea. Who knows? I actually don't even understand what Michael Sayer says during his earnings call. He's all over the place. He sounds like a wizard. So, but it has worked if you kind of invested in a certain time period. I also wanted to mention from a retail perspective, Goldman Sachs, they did see large inflows into US and emerging market equity funds. They found that, and I'm quoting them, while equity flows increased, money market funds assets fell by $62 billion. This is the third largest level in our data set. So here's the chart that they shared. And on top of that, Strategist, which provides really good research, they said it's about 3 weeks into the year, and equity ETFs are averaging $5.6 billion per day, which is up from 3.5 billion per day in 2025. So there seems to be more people bullish into equity funds, and so you can see what you're seeing here is just like the dispersion between equities and money markets, and that's a big reason because of that is yields have been continuing to fall down. So 1 month, 6 months, 1 year Treasury bills continue to fall. Obviously, what we're seeing here in the last 3 years, the high was almost 5.6%, which no wonder so many people rushed into cash alternatives. But that has continued to come down as the Federal Reserve continues to cut rates. So if you look at a 1 year Treasury rate, you're getting about 3.5% interest there. And another reason why people are bullish about just the the market is money managers in particular, they don't even see a recession coming. So this is a share of fund managers surveyed by Bank of America expecting a global recession in the next 12 months at the lowest since May 2021. And so maybe you're saying, oh, everybody is becoming more, um, they're not appreciating the risk in the markets, but I think they might be. I think they're seeing consumers continuing to be resilient, economy still doing well, the credit spreads are super tight. So the bond market, they don't see a recession coming either. So I think people are just, even with double digit returns for the last few years, I mean, they're still putting money into these to the markets. Your thoughts on that, Paul?
Several. One, if you can pull up that inflow outflow chart, I think that's great. We always talk about, again, logic versus emotion. If I had to do it all over again, throwing my finance degree away and getting a degree in psychology. And the first thing I notice on that is look at the 2020 outflows.
Mm,
So there's a classic example of March of 20, COVID happens. We experience a 34% market decline in 33 days. And what's everybody do? Record outflows. Single worst thing you could do. And so you mentioned several, what we call once in a lifetime anomalies. But that's why, we've been saying with clients, even the last 6 years, we've had COVID, we had a record interest rate increase, we had Trump's tariffs. Those are run into the storm opportunities. When everyone else is fearful, when everyone else is selling, like you showed on that previous chart, that generally presents itself as an opportunity. It's not surprising to me with the dramatic swings 1% or greater. We live in a 24/7 news cycle, and if we go back to the 50s and prior, they just didn't have access to information like we do today. So naturally, I think we're going to continue to see these outside moves, one direction or the other. That is not a surprise to me. And then we've been talking about how in a midterm election, markets are generally negative, greater than 50%, not due to anything fundamentally wrong with the economy or recession news, but just political uncertainty, legislation, policy. And I think as of January 20th, was it, the market was net negative for the year.
mhm,
And then, you said GDP came in a little bit better than anticipated. It was like 35% better. It was like
mm,
4.3, I think, or something crazy. So again, lot in there. I think everything you've shared is great. No recession indicators that we're concerned about. People responding, oversensitive to news will continue to escalate in this digital age. But again, our message remains the same. Be opportunistic when everyone else is fearful. Be cautious when everyone else is greedy. Run into the storm.
mhm. Yeah, 100%. I have a couple of thoughts I did want to share. I- Um, the markets are moving faster than ever. And so I think I saw a Gallup poll. I may be off a little bit, but around 62% of Americans invest in the market.
Mm.
A lot of them are just doing it, every paycheck, because of their 401k. And so no matter what is happening in the market, they just continue to buy into it, especially if you have a long time horizon. People are maxing it out. When there was the crash of 1929, I did buy the book from Andrew Sorkin. I listened to a couple of his interviews. He
Mm.
just kind of talks about just the great crash. I haven't read it yet. Look how big that book is. Holy cow. And but he does mention like the stock market didn't cause the depression because only 3 million people were invested in the stock market out of 122 million. So less than 3% of Americans held stocks. It was just the run on the banks, unemployment, all that, the riots. So that caused the big depression. But now our institutions just have more tools in the tool belt. The Federal Reserve can pump trillions of dollars into the economy, the US economy, the US government. They can buy tons, send helicopter money, so to speak, because they can't stand consumers just not doing well. And so because of these tools, I find it very hard to see like a major crash happen, because I don't know if our institutions will allow it. I think there's still a chance of, you know, bear markets 100%, but I'd rather have geopolitical risk than an earnings risk. Um, when companies are not meeting their expectations from a profitability perspective because whatever is happening, I'd rather have geopolitical risk versus unemployment skyrocketing to 10% and affecting the consumer who's makes up 70% of our US economy. So I and, and Greenland, yeah, I think it's just the rhetoric that was being used, just whatever it takes. I'm gonna get Greenland. So those are some of my thoughts on that. I did want to talk also about the strong economic growth. What you mentioned already, Paul. Last quarter got revised a little bit higher from the Bureau of Labor Statistics. You can see it here, quarter over quarter increase seasonally from 4.3 to 4.4%, supported by stronger exports and a smaller drag from inventory. By that, I mean there was a lot of companies buying a lot of inventory ahead of tariff, and so uh, they still have enough inventory on hand, so that has not there's not been a big pullback there. No change in consumer spending growth. It still grew 3.5% quarter over quarter, and those are strong numbers. Again, as I mentioned, 70% of the U.S. economy is driven by the consumer, and demand is still doing well. We saw that from the banks that we mentioned last week, and the Atlanta Fed, who shows just what kind of projecting what Q4 will be. They have real GDP tracking at 5.4%. 5%, that's crazy.
Amazing, over 5, amazing.
Yep. And that's what you do. So obviously there will always be people who are so pessimistic about the US economy because of the large deficit that we're carrying. And, you got to get your house in order. But the deficit has been, something that doomers have been pointing at for decades. And it's not a problem until it is a problem. And so I do get that. But one way to get out of paying so much in interest, getting out of our deficit, is growing. And so instead of just cutting and having austerity, we can grow out of it. And so that is good to see that the economy continues to grow at a very good clip. Your thoughts on that?
Yeah, financial repression. I mean, you're looking at what I call a developer mindset. Donald Trump would love to just grow his way out of the economy, make the deficit numbers irrelevant. I think it's a dangerous game to play. Like, I'm very debt averse. Proverbs says, "Beware the borrower is a slave to the lender." And I don't want to be a slave to anything or anyone. But man, the consumer growth Q2 4.4, amazing. Initial numbers almost 5.5. Fourth quarter, like, again, like them or not, the economy is humping. Those numbers are really encouraging.
Yeah. And I think we talked about just last week of just the affordability crisis. I think that's what the Republicans are tackling right now. I think I was looking at a poly market that there's a very large percentage of bettors thinking that the Democrats will take the House. And that is nothing to be surprised about. Usually that is what happens. At the same time, there has been some talk on just more regulation on the banks. I think I saw yesterday that the Trump administration is suing Jamie Dimon for $5 billion because they cut him out on some of the counts from political reasons. So I'd be interested because the banks have been kind of tiptoeing their way. They always tiptoe their way out of bad deals from a lobbying perspective. It doesn't matter if it's Trump or whoever is in office. So I wonder what Jamie Dimon is going to say. He did get paid $40 million, over $40 million last year, and so I think he has a couple of lawyers that can help him out. So we'll see what happens on that front. But again, banks are still doing well, consumers are still doing well. So that is on the economic front.
And as we talk more throughout this year on the midterm elections, sharing some of the data with our friends on like a house divided. Often markets tend to do really well when we have a house divided because they're not worried about policy swinging dramatically one way or the other. So that might be fun to share in future episodes.
Mhm. Yeah. No. Well, for sure. So, wisdom of the day. This is a segment that we'll probably hold on to uh, moving forward. But you had the wisdom of the day is just thinking about breakthrough ideas. And so, Paul, I think you had a couple of good stories and quotes on just ideas that people thought were really bad ideas, really silly ideas, and it turned out to be some of the most innovative technology.
Yeah. Well, when you asked about that, first three things that came to mind. One, I love the quote from Anchorman: 24/7 news or sports network. Who would watch that? I just think that's such a great line, and obviously the rest is history. But the two serious ideas I always think of, like I love the concept of innovation, and even Albert Einstein himself says imagination is more powerful than wisdom, and I still think the best is yet to come. And there's that famous quote from I think it was 1899 or roughly 1900 from the U.S. Patent Office that allegedly said everything that's been invented has been. And just think about that. That's, 1890s. And so just to see what's happened even just in our lifetime is truly mind-boggling. And, then on a more specific level, I think back, I had the opportunity to hear Tom Marsico, who used to manage Janus and then the Marsico funds, speak in the late 90s. And this is when the internet was a baby, and people forget the internet was essentially created for the United States government to exchange information, research. Thank you, Al Gore. And in the late 90s, Marsico shared to a group of financial advisors. He said, "Do you know what the future of the internet is?" And he said commerce. And at that time, that was again mind blowing. Like, who would buy anything on the internet? Who would put their financial data, their credit card information, their banking information on the World Wide Web? And God knows where it would go. And now, today, 27 years later, can you imagine your life without digital transactions? I mean, think of how many things a day that we buy online. In 1999, that was completely foreign to everybody.
Hmm.
So
Yeah, it
those are
is. It
just
is pretty crazy.
crazy breakthrough, and we're going to see even more. I think disruptive, more as we like to say, force multipliers in the future.
Oh yeah, we can't even imagine all the efficiencies. If you've been playing with AI, and AI has only been around, a couple of years, at least from a mainstream perspective, and the models keep getting better. I'm actually thinking about this is not even AI. This is just like something I was going to get. There's some glasses by Meta where like it kind of gives you a little icon of like, hey Meta, take me to Chipotle, and it kind of gives you directions, and people can't see that you're seeing something on your little glasses. So it's just like it continues to evolve. At first those were really silly ideas. They're still losing tons of money on those products, but at the same time, just seeing where the technology is going. I did actually hear this past week that Google is going to be incorporating, excuse me, Apple is going to be incorporating Google into their phones and giving like Siri a facelift, because who likes Siri? Siri is
Not me. It's
man,
terrible.
man,
Yeah.
they stink. And but then they're also thinking about creating some type of pin. Apple is, where it has a little camera and it can hear you. I'm not sure. Again, beta product at this time, but I think that's a terrible idea as well. But I'm sure many ideas sound terrible when they first come out. And this is where it goes to the breakthrough ideas. They're very hard to manage. And this is an idea from Ben Horowitz's book, What You Do is Who You Are. Fantastic book. If you want to be a better leader, build a better culture, highly recommend. But he says that breakthrough ideas are hard to manage because they fail far more than they succeed. And before they succeed, they're almost always controversial. Truly innovative ideas often look like bad ideas at first. And history is full of examples. In 1876, Western Union, which had a monopoly on telegram services at the time. And if you ask me, hey, Gio, what's a telegram? I don't know, because it's not around anymore. Seriously. But they passed on buying Alexander Graham Bell's patents in 1876 because they thought the telephone was a toy.
Mm.
And now Alexander Bell created the American Telephone and Telegraph Company, or AT&T. as we know it now.
Yeah.
As of January 22nd, 2026, AT&T's market cap is $167 billion, and Western Union's is about $3 billion. And
Man,
Netflix is another classic example. As late as 2010, media executives dismissed the company as a joke. Time Warner CEO and Jeffrey Bukes, I think that's how you say his last name, he said, "Is the Albanian army going to take over the world? I don't think so." But to now today, Netflix is in the running to buy Time Warner's assets, which is just crazy how the
crazy.
tables, how Michael, I think Michael Scott likes to say, how the turns table. And so one of my favorite movies is Good Will Hunting with Matt Damon and Robin Williams. Do you know what my favorite line is on that? Or what's your favorite line in that movie?
You like apples?
Yes, exactly. Exactly. Netflix is like that, is like Matt Damon. And that one guy who's like not cool, that's Time Warner. And so how do you like them apples? Right there.
I love it.
And so that's how it is. We also can't forget that Blockbuster had the opportunity
Yeah.
to buy Netflix at $50 million. And Blockbuster passed on the deal. Obviously, I think, well, I know now they're bankrupt. Netflix is the most profitable streaming business in America. And so not every crazy idea is going to work, but without a culture that protects innovation long enough for validation, even great ideas can die early. And Netflix's stock is up 27,000% since it launched streaming. But so what I'm sure some people are going to say, well, uh, all you have to do is just find a great business and just hold on to it. And actually, I'm not saying that either, because picking the right stocks over time is so hard. This is a chart of just showing you how Netflix has done over the last almost 5 years versus the S&P 500. And so orange line is Netflix. So over the last 5 years, it's up 58%. S&P 500 is up 84%. And so even though Netflix's earnings increased 315%, so from a fundamental perspective, it's done extremely well. But even then, you would still underperform a diversified index. This is just another reminder how hard it is to pick stocks. So I thought that story from the book was interesting. Even more interesting was just how even though Netflix has done really well, it still has underperformed the S&P 500. Obviously, a lot of the underperformance has come in the last year and a half, and now they're in a bidding war, and so we'll see how that turns out. So, any thoughts on that, Paul?
Yeah, great chart as we like to share in any given year, even in years when the equity markets are positive, what 35-40% of the S&P is actually negative in
Mhm.
that given year. And then even on that chart, I think it was essentially 3 of those last 5 years post COVID, 3 of those 5 years Netflix has underperformed. It was only, I think, in 2025 when it surpassed the S&P, if I remember your chart correctly. So it just again shows how difficult it is picking a winner.
Yep. Okay. With that, my friends, please, if you have any questions, you can email us at lwp@nm.com. Real people over here will really answer those questions. And if you like the show, please like, subscribe, and share with a friend. And we will see you guys next time.
Awesome. Have a great week. God bless you.